Mabibi na mabwana who have some very demanding tax issues with the government, please welcome to today's meeting. It's a meeting officials and it's more of a training on tax, and we hope it will be as deep and as detailed as possible to ensure that we are able to meet your needs. And to start us off, we'll have the national anthem from Sylvia, and then have the 4-week test from James, and then do the grace, and then we'll get off from there. Sylvia, over to you.
Hi, my name is Sylvia. So I'll do the national anthem in English. So, O God of all creation, bless this our land and nation. Justice be our shield and defender. May we dwell in unity, peace, and liberty. Plenty be found within our borders.
Asante, Sylvia. Super.
Before we test, of the things we think, say, and do, is it the truth? Is it fair to all concerned? Will it build goodwill and better friendship? Will it be beneficial to all concerned?
Thank you, Superior. Let's have Freddie, the grace.
For what we are about to say and do, may we be thankful and ever mindful of the needs of others.
Thank you, Frederick. And I'll request everyone to cross your right hand, cross your chest, as you give a loyal toast to the President of the Republic of Kenya.
To the President.
The President.
Okay. Asanteni sana. I think wacha niwaambie once again, welcome to the meeting. The discussion is purely on tax today, and we'll be having 2 sessions. We'll start with a session addressing individual tax with a key focus on those who are employed but they have taxable incomes. And then that will run for around 30 minutes. Then after the 30 minutes, we'll do business tax for majorly those in business. Nicodemus, habari yako?
Mr. President, niko mzima kabisa.
Yes, hii mkutano nilisikia imepangwa kwa watu kama wewe.
Yes, that's why I'm here, eagerly waiting, pen and paper at hand.
Yes, so we'll be having the 2 conversations. The initial plan was to have rooms so that we can have the trainings running concurrently. But due to the public demand, wamesema wanataka kukua in session for both trainings. So instead of going to the breakout session, we'll just have the trainings running from this room. But now we'll start with the individual tax, and then after around 20-30 minutes, we'll pick it up with the company and business tax training, and we call it a day. So to take us through the trainings, we have our very own Alfred Mwashigadi. Alfred Mwashigadi is a member of the club, and his day-to-day work revolves around accounting, making sure some people like you here are paid with the government when it comes to your payroll and it comes to your taxes and all that. So Alfred will take us through the individual tax training. And then after Alfred, we'll have past district Rotary representative, that is Richard Mwangi. Richard Mwangi is well experienced in the finance world, and that's where he gets his bread from. And Richard will take us through the business training. So I think without much ado, I'll jump straight to Alfred to pick it up. You can see I'm trying to not to go through the introductions. I think I can pick up introductions huko mwisho wa mkutano. So tuingie kwa kazi direct. Alfi, kazi kwako. You can share your screen, you have been enabled.
Hi guys, okay, my name is Alfred. I'm a member of the club. I'd like to begin off with just a simple illustration of how we can be able to file the tax in terms of the employment income. So I want to share. I just want to go with the from the initial steps of how we can be able to download the form. So the first thing you do, one thing I can say is we normally file our returns from January to end of June. And what happens is you come to the KRA portal. So basically, I hope I'm sharing the screen for the.
Not yet.
Not yet.
Yeah.
Oh, sorry. Just a second. Okay, hope I'm sharing the screen.
Not yet.
Not yet.
Not yet.
Just a second.
Yes, you are.
So this is basically my iTax login page. So ideally, this is basically because I've already filed my returns. So what I'm doing is first we go to the page, the iTax, the portal, KRA portal. You log in from at the home page. So perhaps somebody can just go to the home page. Let me retrieve my Gmail, my PIN. once I log in, I go to returns. From the returns, you can choose, assuming you're doing your returns for just the employment income alone, you just go straight to the ITR for employment income. But assuming you have other sources of income apart from just employment, you can go to the file return section. So you put in the file return, and then you put in income tax, resident individual, and go to next. Now on this page, so in my case, I would not be able to do the normal return since I've already filed for the year 2019. So I'll just pick amended. This is just to show you how it's done. Then I key in the details for last year, that is 2019. Sorry, before that, what I normally do is you can choose just to go straight ahead and download the income tax form. That is a resident individual form in Excel. So let me just download it. Yes, so here we are. So this is how a normal tax return form looks like. As you can see, it has all the sections down here. There's the basic information, there's employment income, there's the details of pay deducted. So you first put in your PIN number, the type
We
of
can't
return.
see that.
Can you see it?
That's another screen.
Oh,
yeah.
Sorry. Just a second.
We can see it.
You can see, right?
Yes.
Okay. So no, this is just a basic template of filing in the return. So what is here is the type of return. You either have the original or the amended. The original is what you normally have when you're putting in the return every single year. The amended will be, I think maybe you had filed it wrongly and you want to amend it, or in my case, just for demonstration, put amended. But normally the original is the one that you normally do for each year once you're filing the returns. So from there, you come to the return period. So the period, in this case, assuming you're filing for this year, you'll be filing for the period of 2019, from January 2019 to December 2019. So I put in 2019, and then return period to 31st of December. Sorry. Just a second. Yeah, so put in 31st of December 2019. So on the other, on number 7, it's where they have, do you have any other income apart from employment income? So assuming you have other income, assuming you have rental income, or you have other businesses that you're doing, then you come and write, just come and click on yes. Assuming you just have the employment income, you just change it at no. If you're in a partnership, and therefore you are earning some partnership income, number 8 would imply that you put yes. If you're earning some estate trust income, that is maybe some, assuming maybe inheritance or some income of the sort, or income that comes from an estate that or a trust that has been put in place and you earn income from it, you'd put yes. In employment, if the employer has provided you the car, you indicate yes for the car. If you have a mortgage, you then come and put yes, if you have a mortgage or not. If you're in a home ownership savings plan, you just come and indicate on that box. Now I'd go down to where number 16. Now, assuming you have a disability, this is very important because for anyone who has a disability, there's always an exemption for salaries between 0 and 150,000. So assuming you have a disability, this is a place where you put yes. Then if you want to declare your wife's income, you would then click yes, put yes, and then put the PIN for the wife, and also just follow down on whether the wife has another alternative income apart from just employment income. This is the basic information page where you put your bank details under section A part 2. If you have other incomes which now are audited, normally once you have a financial statement that you have an auditor, or maybe someone who is a CPAK who does the audit for the financial statements, you have to indicate the PIN of the auditor, the name, and also the date of the audit certificate. If you have rental income, and that is where you're providing, there's normally a tax for every rent collected. This is where you come and key in the PIN for the landlord, that is self. You put in your PIN, your name, the building, the street, the details. Also come to section 4, part 4, section A, part 4. You put in your landlord details for the wife. Assuming the wife is a landlord or the landlady, that is that case. And down here you put, assuming now you're a tenant, you come and put these details at this other side on section A, part 5. Now, down here, I mentioned the part about the disability. Here is where you come and once if you have a disability, it would mean you have been given a certificate for disability. This is where now you come and key in the exemption certificate number. The certificate normally has a number that you come and key in, and the date from when it was issued. It's always renewed, so there's a date from and date to, and the same applies for the wife in case the wife has a disability. The reason being, as I earlier indicated, is because there's always an exemption for incomes of persons with disability. Now, moving forward to the next section, this is where you have the wear and tear. If you have a plant and machinery, assuming you have a factory, you have manufacturing plant, you have machinery, tractor, lorry, something, assuming in the construction industry. This is the place where you come and key in the plant or machinery, the details. So item would put the item description, the description of the plant or machinery, the serial number. This is something that will then be either in the logbook, or if it's the machine, the serial number of the machine, the rate of purchase, and the rate at which you do the rate of depreciation, the actual cost of the plant or machinery, and in column C, the disposal at cost. Assuming you disposed the machinery or plant during that year, you come and indicate the amount that you disposed of, and the total cost will be net of the cost and the disposal. The same would also apply to your wife. Assuming the machinery or the plant was owned by your wife, you come and indicate the details here. Okay. Now, you can move to this other section, where it's the employment income section. And this is where most guys who are employed and do not have additional incomes, but even if you have additional income, this is actually the point where now you come and put in what you're earning from in terms of the salary and the benefits, if you're having any benefits. So under section F, just look at, there's a part for the name of the employer. The gross pay would be the basic salary plus any benefits that you're having in the employment income. So this would basic salary, either the house allowance, car allowance, if you're having issues with telephone, if you have any type of benefits. So this would accumulate to the gross pay under Section A. The allowances and benefits other than car and housing would be under Part B. So allowances, as I mentioned, would be issues to do with if you're having airtime allowance, if you're having meal allowance, all these allowances that are given by the employer. Fuel is part of an allowance. On the benefits, you have domestic workers allowance, assuming you're provided for your workers. Utility allowance, electrical bills, water bills that are paid by your employer. Those are under benefits. That would be under Section B. So you key in all these, but C, the value of the car, assuming you're given a car benefit, you put the value of the car under Section C. And if you're having a housing allowance, this will you put under Section D. E is where you put in the pension, if in excess of 300,000 Kenya shillings. So if there's a pension that is being deducted from a salary, this is a place where, if it's in excess of 300,000, this is for people who have, okay, for you to get a pension of 300,000, then was normally, assuming that the pension is 5% of your basic salary, then 300,000 would mean you're earning 300,000 times, just round it off to 100% over 5%. So under total employment income, this is where now you have the addition of all these from part A, B, C, D, and E. Now this also applies to this is assuming you're also filing returns for your wife. For the single guys or the bachelors like myself, I think this is a place where I just skip to and go to the Section J, where there's a computation of mortgage interest. This is where you have a mortgage, and the amount of mortgage is being deducted from your salary. So you put in the mortgage account. It teaches you the name of the lender, the mortgage account number, the amount that is borrowed, that is being deducted every month from your salary, and the amount outstanding at the year end. These are details that you key in over here. The mortgage always attracts interest. So the interest being paid on the mortgage, you also put in at F. Then you move to the pay. The pay stands for pay as you earn. So this is the amount that's being deducted at source for the salary. You come and put in the PIN of the employer. Every company has a PIN. This is where you come and put in the PIN. I must state, first of all, that for every employee who is filing a return, the employer always provides them with what you call a P9. A P9 is basically a form that details all the earnings for the year, the taxes that have been deducted over the year, the reliefs that have been deducted, whether the personal relief or the insurance relief, and the pension. If there's a pension being deducted every month, there's always a total at the end for total amount of pension being deducted, and the pay at the end. So this is using the P9. You have all these details. For the PIN of the employee is provided on the P9, the name of the employer, taxable salary. This is basically the gross pay for the whole year. If you are only earning the basic salary, if you're not getting any benefits, you just key in the total basic salary for the whole year and a taxable salary. And then there's something called tax payable on the taxable salary. So normally this is an amount that is this is actually the tax amount that is being deducted, including without deducting the reliefs. As I mentioned, there's the insurance relief and there's the personal relief. The tax payable is the tax that includes the relief. That it's actually the figure that is taxable on the amount that has both the insurance relief and the personal relief. The payee, on the other hand, is the tax being deducted after the reliefs have been removed from the gross amount. So normally part A and part B amount of tax, once you deduct A and B, you're able to get the amount of tax payable or refundable. So this would also apply to the better half. Now this is now under the pay. Moving on to section Q. Assuming you had paid tax in advance, that is advance tax that you had paid before. You come and key in the amount that you had paid and the date when you made the deposit, plus the payment registration number. The same applies. The tax that you normally, it's actually you, assuming you have an income, maybe you're having an income, and normally do your own self-appraisal on the tax that you're going to pay. Normally, you provide documents on the tax. This is something that you come and put under this column, the amount of income tax paid plus the date of deposit. Again, there's a space provided if you're also filing the return for her. So lastly, under section T is where you have the tax computation, where now all that you filled in from the first section, this is where now you get the final computation of the tax. So under, no, this is purely for employment, for the guys who have the P9, assuming you have the pension contribution. This is a place where you put in the pension contribution, defined pension contribution, that is. If you had a mortgage interest, you come and indicate the mortgage interest under this section 11.2. Or if you made a deposit in a home ownership savings plan, the same applies, you come and put it here. So under part would now be employment income under 12.1. Employment income, total taxable employment income from the employment. This is the column 4. This is the part where that amount is. And so basically on this section, you find that once you've keyed in details on these are the sections. Once you've keyed in details on the gross pay, you put in details on the computation of the mortgage, you put in details on the pay. It normally automatically auto-populates onto this section of the tax computation. So the two details that you must key in under this section, which are very important in you getting getting a final computation, either it's a refund or otherwise, is section 11.1, where you put in your pension contribution. How do you get your pension contribution? You're doing, this is where you're doing your employment filing of employment income. So you normally use the P9. It's always indicated pension contribution has been deducted for the whole year by the company. This is where you put the gross figure for the 12 months. I'll give an example. Assuming you're earning a salary of maybe a basic salary of, let's give it around maybe 100,000. And the pension being deducted every month is at 5% of the basic salary. That means every month 5,000 goes to your pension scheme. Pension scheme is a scheme that has been subcontracted by the company, where your pension goes every single month. So the 5,000, if you do 5,000 times 12,000, so 5,000 times 12 for the 12 months, the total amount is what you key in under 11.1. That will be 5,000 times 12, put it here. And then the second very important detail you should put is where you have the personal relief under 12.6. The personal relief is social relief that you have on your salary. So you put it here under 12.6, and assuming you had you're also having a life policy, a life insurance policy, where there's always a relief on the insurance. So the gross of that amount for the 12 months on the cover, assuming I'm having a life policy with assuming maybe ICA or Britam in that case. So there's always a relief on the insurance. The total amount for the 12 months is a figure that you put on a 12.7. Having done that, and like I said, the other figures will always auto-populate from the section that you filled in the other sections. When you move to part number 14, tax due or refund due. Now here, the amount after the deduction has been made and the computation, you should normally have a zero, meaning that the figures are balanced out and there's nothing that you're owing or being owed by KRA. But in the instance that you have a negative figure on this side and under part 14, it would mean that you KRA owe you some money. But in the instance that you find that it's a positive figure, it would mean that you are supposed to now refund money to KRA. There's an amount of money that KRA are owing you. I hope that is clear. If it's negative, it means KRA should refund. If it's positive, you should refund KRA. So normally KRA, I have never heard of an instance where they refund money, but I've had so many instances where you're given a penalty for any amount that is actually that you owe KRA. This is a section that you should be very careful. Once you find that you have money that you need to pay KRA, it's very important that you liaise with them. Maybe assuming it's an issue of maybe wrong computation, or there's an issue with the P9 that maybe there was a wrong computation of the reliefs and maybe the taxes. For instance, you find maybe an employee who came in maybe in the middle of the year, so he was earning another salary from another company, and now the P9 would only provide for the 6 months that she was in this company. So normally there's a discrepancy in the final tally of the pay, because for 6 months, and once you also not get the P9 for the other part, there's always a little bit of a discrepancy. This is when now you follow up with KRA for maybe rectification on their side. Yes, I think that is basically it with regards to the filing of employment income. Yes. Having said that, I think there's a component of how we will be able to initially do tax avoidance. Now, there are two things that normally we always maybe have between tax avoidance and tax. Let me just share this screen just a second. So there's something called tax avoidance and tax evasion. There are two very important aspects when it comes to taxes. So I'd like to just go through very quickly on the differences between the tax avoidance and tax evasion, and how, as guys who are employed, can be able to avoid tax, not evade tax, avoid tax. There are some very simple techniques that I can just brush through on how you can be able to avoid tax. So first of all, I'd like to just give an illustration, or maybe just to illustrate the differences between the tax evasion and the tax avoidance. The tax evasion is illegal. It's an unlawful attempt to reduce tax liability of taxpayers. Examples of tax evasion would be making false statements and information. Assuming maybe you have maybe in the preparation of the financial statements, you make false statements. Inflating deduction without legal proof. When you inflate the deductions normally, you have a very low profit in a business. If you inflate the expenses, the profit is very low, meaning that you'll have a very low tax liability. This is actually very illegal. Hiding related documents to prove that you actually earn business, to prove the actually earned business profits. So this is where maybe you hide documents relating to your business with a view of reducing the profits, concealing or transferring assets illegally. This is whereby you have assets that you should declare as either current assets or long-term assets, and you maybe transfer them illegally with a view of reducing your balance sheet, or just so that you can also reduce then the profits, magnifying the tax credit, or claiming excessive expenditure. These are just a few illustrations of how you can be able to evade tax. So tax evasion is illegal, at least in Kenya, it's very illegal, and carries a penalty and also a jail term. What about tax avoidance? Tax avoidance is the act of minimizing tax liability within the limits of the law or without breaking the law. So this is whereby taxpayers can use legitimate ways to reduce the amount of tax payable in association with their financial activities. You can use using tax deductions for increasing business expenses and business tax bill, delaying the payment of tax until a later date, taking advantage of tax credits for legal purposes, like for sick leave and family leave, sheltering the establishment of employee retirement plans. These are just a few examples of how we can be able to avoid tax. So I'm going to just illustrate in the employment aspect how an employee would be able to reduce his or her tax liability legally. So there are about 5 or 6 ways you can do that. You can do that through your pension, and do that through the disability exemption. Assuming you're disabled, this is where you're disabled. The insurance, vacation benefits, through bonus and overtime allowance, and through NSSF. So under pension, this is whereby the government has allowed this to happen with a view of for a citizen to always plan for their retirement. So employees are always encouraged to save more for the retirement through the pension schemes that now once they retire, they can have actually something to still survive after retirement. So now there's always an exemption of any amount that is below 20,000 and below per month, or an amount of 240,000 per year. So if you give a pension of 20,000, that amount is totally exempt from tax. Anything above that now is subject to tax. Again, I mentioned under tax exemption for people with disability. Under Kenyan law, any person who has a disability is exempt from paying tax for any amount 150,000 and below. So if you're earning anything below with 150 or below 150, it's purely tax-free. The only requirement is that the employee should have a valid exemption certificate to prove that he or she is actually disabled. Mortgage. So previously, before 2020, there was always a mortgage relief on any person who has a mortgage. This is the view because the government has always had an initiative where they want the citizen to have their own housing. So initially, it was encouraged that anyone who has a mortgage, they'll have a bit of tax exemption for any amount that is 25,000 and below a month. So if I'm paying a mortgage of 25,000 and below, that would be exempt from tax. Though in 2020, the Finance Act that was passed by Parliament, they removed the home ownership plans. This is because of the Big Four agenda that has been advanced, whereby they're trying to provide cheap and affordable housing for the citizen. So now, moving forward, this has been scrapped. So any mortgage that is taken is actually taxable. Again, bonuses and overtime allowances that are paid are exempt from tax. for person whose salary before the bonus did not exceed 11,000. This is for the low income as employees. So with a view of not now punishing them further, tax exempt. So ideally, this is to reduce the tax liability, and it's because of the view to reduce or to encourage people to save more for their future on the retirement into retirement. Any amount that you save into the NSSF scheme of 20,000 per month and below is tax exempt. So these are ways of just reducing a tax liability in a legal way. Insurance policy. If you take an insurance policy, in a group life policy, there's always a relief on the amount that you're taking. This is to encourage the citizen also to take insurance policy for the life cover, just in case anything happens, something that will benefit the family, and also once it matures for themselves as well. Yeah, so I guess that's it with regards to tax avoidance as an employee. These are just aspects you can check if you want to reduce your tax liability, because ultimately it will reduce your gross. It's not taxable to reduce your gross and ultimately reduce the tax being paid on the gross amount. Yes, I think that's it.
Thank you, Alfred. I think we have, you can pick around 3-4 questions. I can see some in the chat box. Then from there, we'll proceed now to the business one. And the first question is from Frederick. He's asking if you include your wife in filing tax, does that mean, do they still have to file individually? So if in my Kaving as the husband, I choose to file for her, does that mean now she's exempt from filing or she has to file? And then the other one is from James. James is asking if your employer is not based in Kenya, how do you go about it? I guess, James, you can expound on the question, and then we'll have Eva ask a question, and then Alfred can respond to the three.
Yes, thank you, Ambrose. So my question is, if your employer does not have an office in Kenya such that you can't access a P9 form from them, how do you go about filing your taxes, especially for the employed part? Thank you.
Thank you, Super. Eva?
Okay, my question is, so I don't know if I missed this part. Maybe you explained it, but just kindly just indulge me. What about those people who get paid on a consultancy basis? So, like for example, if I get paid, so I pay at the end of the month, I pay withholding tax instead of all those other pay and all those other deductions. I pay withholding tax. So do I have to file at the end of the year? Because I file every month and I pay my withholding tax. So do I still have to file at the end of the year?
Thank you, Eva. And then now, Alfred, after responding to the questions, I think now someone is asking, I have filled in the Excel, the computation has been done. So what happens after that? I think now you can finish up on the question and then finish up on the process.
Oh, sorry, I didn't get James's question.
James, you can go ahead.
So my question is, assuming I work for a company that is based, let's say, in the UK, and so I'm a remote worker, that is, and it's based in the UK. For me, I'm based in Kenya, and yes, they pay me, but they don't do all those deductions. And again, I can't file returns because now the company does not have a PIN number from Kenya because it does not have an office in Kenya or any registration in Kenya. So how do I go about filing my taxes?
Okay, so to start with the this question, if you include your wife, they have so every person. So if you include if your wife has assuming if your wife has maybe rental income or has an employment income, it's actually she should file her returns. For this actually this question this part of under the wife, it's advisable to file, but actually the wife also should file her own returns. So under that part, I know of instances where in a job where we have people who, I mean, a couple who are married, and so you in as much as the husband would want to file for the wife, it's actually an obligation. It's actually by law that the wife should also file her own returns. On the part of on Eva's question on the consultancy. So in this case, I'm assuming you mentioned the withholding tax, which you always file every single month. In this case, I would not be very conversant with the consultancy aspect of it, because this is someone who's not employed per se by the company. The company does not pay him or her the salary every single month. This is just an one-off payment. So this is something I would maybe have to research, then get back to you. And that it's a gray area for me in terms of the consultancy.
Okay, let me clarify something. The consultancy happens every month. So basically, I get paid every month, but I get paid with the consultancy. When you go to iTax, there's that for what do they call it? Professional services and management fees less than 24,000
Yes.
are exempt, and then after that there's 5%.
Yes.
So that's the one my employer pays me with under that obligation. So it's every month, but I pay withholding tax instead of the other payee and all that.
So
I'm still on the payroll.
Yes. Huh? Uh-huh.
Yeah.
No, okay. Assuming this is an employment income under company, right?
I go under income tax, but then I do withholding. Hello?
I can hear you. So this is you're basically employed as a consultant by this company. Yes. You're getting a salary every month.
Yes.
Okay. Yes. In this case, I am this is something I need to research on. My feel is that you have to file at the end of the year. But something also with regards to consultants, because there are two aspects of consultancy. There's where you have your own consultancy firm and you engage with a company, and you can also just be getting getting a consultancy fee every single month, but not as an employee, basically as a contractor. And there's also an aspect whereby you're employed as a consultant by a firm, where now you're paid as an employee of the firm. So it's something I would maybe want to research and get back to you.
Okay, because I figured if I pay the withholding tax every month,
yes,
I don't know what I would file at the end, because I've already been paying, because it's already cut from. I don't know, but if you can find out for me, I already pay every 5% of whatever I'm paid. Mm-hmm. Although it may not be constant every month, for whatever I make every month, 5% of it is cut and paid to KRA by my employer.
By the employer?
By the employer. So I wondered, how do I file at the end? But if you can find out for me, maybe that would be very good. Okay. I would appreciate that.
I will. I promise I will.
All right. Thank you.
For this, for Frederick, you asked what happens after filing the Excel. Good question. So now, let me just go back to, let me just share the screen let me just share the screen after, sorry, just a second. Share screen. So, so this is the initial screen that had actually downloaded the form from the iTax. So once you're done with the form, there's something here that I think it's important that I explain. Let me just share this. So once you're done with the form, you go back to, you save it and then come back to the page where you actually downloaded it before. There's something I was indicating here where you say you fill in the period from last year, that is assuming you're filing for 2019, and then there's a place where you come and choose file. So you just come and pick choose file, then go to your documents and just pick, right? Yeah, you just pick where you had saved it, and then come here and agree to terms and conditions. Yeah, and then at the end of here, you come and say submit. So for me, I would not be submitting because this is just that I already submitted in June, but that is normally the procedure for someone who is doing the Excel form. So there are two ways of filing the returns. You can either download the form. This is for someone who has other incomes apart from the employment income. But assuming you just want to do your employment income and that's it, you come to returns and then ITR for employment income. Here, it will just take you directly to, you just be filling from the screen. There will be no need of you uploading the form because there will be no download. You just go straight to filling in the details from the screen. Then at the end, you just say submit. Once you submit, it will give an indication that you've filed your returns for that year, and you download the tax receipt. The tax receipt basically just shows you that it's actually proof that you actually filed your return for that year. So this is just something you save, and it's an email is also sent to your email to tell you that you have failed your return. Yeah, that's what you do. For Samantha, you've asked if you change jobs within the year, how does one file returns? Now, if you change jobs within the year, that would mean you, assuming you maybe change twice, you had another job and came to for another job. Once you're filing, you'd have to have the PNNs from both companies. When you merge, there's a total. So I'm assuming maybe this is an example. Maybe you did from January to maybe June in company X, then came to company Y. The gross figures. Then you just have to add what you're earning for the 6 months from this company, plus the gross from the other company, and you fill under the gross payment. Under the pay, you just add what you're earning, the taxes that were being taxed from the previous company and this new company that you're in, and key in under the pay. You just have to add for the number of times you are in that particular year. I hope I've answered your question, Samantha and Frederick.
Yes, you've answered mine.
Yes, you've answered mine. Thanks.
Thank you, Alfie. There's the one for where you're working for an international company and they pay you directly without the P9 or without any deductions.
Okay, again, that is some of us also want to research because, as you mentioned, this company does not have a registration in Kenya. So meaning that it does not have a PIN in Kenya. Yeah, I think it's something I'd maybe get back to you because again, a gray area for me because of the fact that for what I'm conversant with is actually just companies that work in Kenya and are registered in Kenya and have PIN. Because this, as you see in this form, there's a specific place where they ask for you to key in your PIN for the employer. That PIN is very important because for KRA, they also have the records. So once you file your returns, what they do is they do what you call a reconciliation. What they receive from the company through using the PIN that you have provided vis-a-vis what you have filled in at your end, so that they can come with a concurrence of the two. Whether it's now they have to look, maybe penalize you for, or maybe even penalize the company for filing less taxes. So for a company that is not registered in Kenya, it's something I maybe want to also do research and then come back to you, James.
Super, I can see your mic was on. I think you can proceed with the vote of thanks. Then we move on to the next session.
Thank you so much, President Ambrose. At this point, I'd like to take this opportunity to thank our speaker for this session, speaker, trainer, and facilitator for this session, Alfred Mashigadi. We're really honored for you to take us through the session on how to file our taxes, especially for the individuals who are employed and also have other sources of income. And we look forward to engaging you on a personal basis. So in case mtu hajaelewa vizuri, feel free to reach out to Alfred. He's a member of our club and we know you continue helping us. Thank you so much. Back to you, President Ambrose.
Asanteni sana. Thank you so much, Alfred. Rotarian Eva, you'll have to pick the club for us to facilitate your connection to Alfred. That is on assumption hauna namba yake, which I know is a wrong assumption. I think now you can move on to the next step. I think this will entirely focus on those who are doing business, registered companies, partnerships, consultants, and also I think unregistered consultants, the kind of EVA, on a limit withholding. And yeah, so as usual, keep the questions coming and the chat box, and we'll note them to respond. Even kama ukikumbuka swali ya personal tax along the way, just put it in the chat box, and once this session is done, we will respond. IDRR Richard of PDRR Richard, over to you for your session.
Okay, thanks, Ambrose. Hi, everyone. My name is Richard. I believe I've met most, if not all of us here. So I'll be taking us through the company or the business tax aspect, and I'll try to be as quick and as brief as I can, not to keep everyone here waiting for so long. I know it's on a Saturday evening. So having said that, I may want to start with what Eva was asking on basically on withholding tax. So probably just to note, withholding tax on professional services is not a final tax. So basically the 5% which is withheld by, your employer is not a final tax. So it's subject to, you are subject to further tax. So the expectation from KRA is that at the end of the year, as you're supposed to file your taxes. So basically there's a bit under that form which Moshikade was sharing where there's a bit on withholding. So you are basically supposed to collect all the withholding documents which your employer has withheld, and basically, of course, they declare. And that would mean you'd also be subjected to that income at a rate of 30%, less the 5% which you've already paid. Yeah, so just to clear the year, you're supposed to declare that at the end of the period.
What? I owe KRA money?
Yes, a lot of money.
Yeah, more or less. But yes, but I think one other thing probably to come out in my presentation is just to outline all your expenses relating to, relating to offering that service. Might it be car hire? Might it be probably you also consulted with someone, you paid some consultancy somewhere? Any expense related to that service, you outline it as an expense for you, so that your net profit at the end of the day is very kidogo, so that when they tax at 30%, you more or less you're at a zero. There's nothing you pay to carry. So there's a way you're able to maneuver that bit.
Okay.
Yep. All right. So, okay. So I think I'll start with a bit of a PowerPoint just to show us what we have or what is relevant under company or business tax. So allow me to share my screen. All right, we can all see. Ambrose?
Yes, yes.
Okay. So, yeah, so just a bit of an overview. So basically business or corporate tax. So basically levied on corporates. So these are legal entities. So it might be a charitable trust, a society, a company, or whichever, as long as you have your own unique PIN number. So I mean, so that a KRA can be able to identify you. So the applicable rates are 30% for resident companies and at 7.5 for non-resident companies. So basically companies which are not owned and registered in the country. So and how we arrive at what is payable to KRA is basically taking all your incomes for the year, but lessing all the expenses which are fully and exclusive for the production of that income. So basically what I was telling Eva, if there's any cost which you've incurred in the process of offering that consultancy, it needs to be offset as you declare your taxes. So some of the allowable deductions here. So and by deductions, I mean expenses which are allowable by KRA. Things like capital allowances. These are things like wear and tear and the like. Contribution to pension schemes. Subscriptions, things like specific bad debt and rent, and plus many others. So the assumption is normally that as you file your company or business tax at the end of the year, you have already done your financials. So your accountant or your auditor has had a look at your books. They've been audited, and I mean, you've already come up with the final set of accounts. So that, I mean, you are filing your taxes from an audited set of accounts. And I mean, second thing, why is there a need to understand taxation in this day and age? I mean, number one, of course, there's an ever-changing tax laws. And I mean, we all agree to this every day and every year. We hear, you know, there's a new finance bill, there's a new this, there's a new that. And tax is one aspect, which I mean is changing every other year. So I mean, we need to be updated and we need to understand, and especially in our case, in our country here. And of course, number two, the relevance of a tax compliance certificate. You realize, especially if you want to, I mean, there's been money to the counties nowadays. If you want to get any tender, one of the things they require is a TCC, tax compliance certificate. And I mean, you can't get that if you haven't been compliant. So that means you need to understand probably, I mean, understand, have I been compliant? Have I been paying every other tax? Have I been filing every other on time and all those things so that, I mean, you can qualify for that. And I mean, we also understand that for you to acquire any property, connection to power line, acquiring land, a car, you know, the use of your KRA PIN in every other transaction. So there's no way you can miss the aspect of KRA. And that means the element of taxation is very important. Moving forward, I just want to go through some applicable or what I feel are relevant taxes under corporate tax. One is VAT. I believe we are all very aware of this. So this is a tax charge on supply of taxable goods or services. They might be imported or locally made. So VAT is basically mandatory for those with a turnover of 5 million and above. So it's filed monthly, every 20th. So the payable amount is the net output, the net of the output VAT and the input. So basically, just to clarify that, so output is when I'm a trader. So I'm assuming I'm selling a kiosk. I buy things from my supplier and I also sell. So what I'm selling, whatever VAT I charge is the output, and whatever VAT I paid to my suppliers is the input. So the difference between the two is what I pay to KRA. Number two is withholding VAT. This basically, I don't think this is applicable to everyone, but withholding VAT is basically a portion of the VAT which is paid in advance. So that would mean if I charge my VAT to my suppliers, KRA expects me to pay a portion of that VAT before the 20th, because VAT is payable every 20th. Withholding VAT is basically a portion of the overall VAT, and they say initially when the VAT was 16%, we were supposed to pay 6% before. So immediately I supply goods, and even before I paid, KRA expects me to pay that. So it's a way of managing cash flow by the taxman. So, and this is only implemented by what we call the withholding VAT agents. Currently it's done at 6%. Yeah, I think that's all we may need to know about withholding VAT. The other thing is, yes, withholding tax. I believe this is applicable to many of us. So this tax deductible from certain classes of income at the point of making the payment. So withholding tax varies from class to class of income. So something like dividends from a SACCO. So withholding tax for dividends is a final tax. So if your SACCO is paying you dividends, you realize that they charge you dividends, they charge you withholding tax, but you won't be required to pay further tax at the end of the period, at the end of the year. But probably something like interest income, professional fees, consultancy, withholding tax is not a final tax. So that 5% or whatever rate which is charged, you'll be required to file it at the end of the period, at the end of the financial year. Mostly it's charged between 5 to 15%, depending on the class of income. And it's also payable every month, every 20th of the month. The other class of tax is installment tax. So this is basically for companies. So it's an estimated income tax, which is paid to KRA. And how this works is that, assuming I'm a company trading and my year ends, I have a financial year for January to December. So once my 2019 is over, so KRA expects me to come 2020, they need me to calculate my installment tax. So the assumption is that the year 2020, I'm also going to make profit, and I'm also going to pay KRA money, but they want this money in advance, or rather they want me to start paying it early in advance, or rather in tranches. So Q1 of the year 2020, I'll pay a portion of what we are assuming is the profit I'll make come 2020. And how this is computed is basically the profit you made in the previous year. Assuming I made 1 million as profit, or rather as taxes which were paid to KRA, I multiply that by 110. So KRA assumes that every year your business grows. So the assumption is that once you make that profit, you start paying in tranches to KRA, and it's paid between the 4th, 6th, 9th, and 12th month of the year. So, but remember, this is only paid with a tax liability of 40,000 in a year. So, if in your calculations of your corporate tax, your tax liability is less than that, you don't qualify to register for installment tax. Feel free to interject in case you may need further clarity on a point. Then we go to turnover tax. I believe those who interacted with the iTax platform, probably they've seen this has really been, emphasized, and I'm sure on the media and all over. So what KRA is trying to do is, by introducing TOT, is trying to capture the mwananchi wa kawaida, the mama mboga, the guy with a shop in town, or the juakali guy, some of these guys in the informal sector. So this is basically a tax for SMEs, basically those with a turnover of not more than 5 million a year. It was introduced by the Finance Act 2019. So this is a tax payable monthly. It's calculated on gross monthly revenue. What this means is that you don't have to offset any cost to your revenues. So if they had to pay 3% of that 100K come the following month, February, on the 20th. So you don't have to say, oh, I paid rent, do I need to net off? No. So whatever revenue you've made, 3% of that is payable to KRA. but I know probably they adjusted this within this COVID period. But what was passed by the Finance Act was 3% of the gross monthly revenue, and it's also remitted monthly. The other thing is that once you've paid this 3%, it's a final tax. You won't be required to pay anything or to file or to make any return at the end of the financial year. So once you are done with a month, that's it. You proceed to other months. And also the other thing they are assuming is that most guys in the informal sector or the Juakali guys, they'll be able to keep just a register of your sales per month. So you say in day 1 to day 30th, I sold XYZ. So basically it's a simple record keeping. You don't have to hire an accountant or someone to come and do that for you. So, you know, it's just, another way of collecting money by the taxman. A bit of a continuation for the TOT as well. It's not applicable to the following categories of people. So those with an annual gross turnover of over 5 million. So if you are making sales of over 5 million, this is not relevant for you. So if you are a company, so a limited liability company, so you're also not entitled to this. A rental income, so remember rental income is charged at 10%, so it's also not applicable here. Management, professional and consultancy fees, those falls under withholding tax also. So remember who they are targeting here is anyone who's not in this category. And remember, these are other people who are saying, we are saying they are the informal sector guys. Moving forward, there's something called presumptive tax. So this is something similar to TOT, turnover tax, only that this is what is collected by the county government. So basically what happens here when you're registering or when you're paying or renewing your your business permit or trade license from the county government, KRA wants a 15% of that permit fee. So whatever city council is charging, KRA wants 15%. But this is not double taxation. Someone may feel like, I've already paid for TOT, why am I being charged presumptive tax? So this is advanced tax. So what they say, you pay this, but in future, in subsequent months, once you start remitting your TOT or any other form of tax, you can knock this off because it's something you've paid in advance. So you can knock this off against your the income tax which you pay at the end of the period. So it's not double taxation. So assuming I'm in the Palace City Hall and you hear 15%, so this is the thing. It's actually very legal. Okay, so we go to the tax filing process. So income tax return, what I'm calling the ITR, is done 6 months after year end. However, tax due is payable 4 months after year end. Just to expound that a bit. So assuming company ABC Limited has a financial year of January to December. So assumption is that January to December, you've done your everything, the auditors come, your accounts are audited. And remember we said you only file your taxes from audited set of accounts. So if your year ends in December, we assume that by the third month, which is March of the following year, you have your audited set of accounts, and then you can engage an accountant or a tax guy to compute for you how much is payable to KRA, assuming you're in a profit position. So KRA wants the money first. Remember, this is KRA you're talking about. They always ask for the money first. So they ask from the 4th month, which is April of the other month of the other year, they want, assuming I made a profit of 1 million, 30% of that 1 million, whichever figure, they want you to have paid by the 4th month, which is April. However, you have up to until June, what I'm saying, 6 months to do the filing. So filing, remember, is a filing platform, which Moshigadi was saying, but now for a company. So you pay first before you even file the return. However, you can do these things together, but KRA allows you up to 6 months to do the return, but only 4 months to pay. Remember, again, for cash flow management by the taxman. So, so these are basically the simple steps for filing your returns. I think allow me to, at this point, I want to I'm not sure if I should do this because it's more or less the same process which Moshigadi was doing, just logging in and going under returns and downloading that form. So, but I already have a downloaded form, so I want to project that form. We just have a look at quickly, then you can come back to the PowerPoint. Okay, so this is a form which I downloaded from one of the companies I work under. So it's a bit different from the one for individual tax return. Just scanning through, there's a basic info page where you put the PIN number, the type of return, whether is it an original or an amended return. Remember, you can amend your return. If you realize you made an error in filing a return, there's the option to amend. However, it's only one. You're only given one option to amend. Then you put the period. So the period here is your financial year period. If your company is a Feb to January to December, then in there, and then all the other relevant details for your company, you just go ahead and fill them. So coming to the next sheet is a profit and loss, basically the income statement. So there are different classes here. This business income, this farming. So I'm sure people like Nicodemus are covered here. This rental income, this interest income, this other. So assuming we are all doing a business, so we'll fill under that column C for business. So we'll start from the top. So, and remember, you only fill what is relevant for your company. Not everything here will be relevant. There are so many things because this is a generic form which covers companies doing all manner of things. So only fill for what is relevant for your business. So if you are doing consultancy, like Eva, so you'll go under business, then you'll go to here. General turnover of professional consultancy fees. So whatever what you made for the whole year, you'll put that figure there. Then things like raw materials, they won't be relevant for you. But for someone who has a company doing manufacturing and they had all these things, you fill in. So the key is you just fill what is relevant for you. If there are expenses here, which you think are advertisement, commission, blah, 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 you go ahead and fill that. It's a bit lengthy, so I may not want to go to every detail. I jump to the other sheet, which is the balance sheet. So this you more or less have to fill as well. So a list of your fixed assets, you list them there at cost, your investments, your liabilities and borrowings, blah, blah, blah. So it's advisable probably if you're not conversant in some of these terms, and get someone who's a bit informed, an accountant or someone who's ever done this, and they can assist you to probably interpret your financials to know what to fill where, so that you're not caught by the taxman having filled the wrong figure. So you, as I said, you go ahead and fill it. And once I think this is in order, it's a bit simple because you are copy pasting from your financials, audited accounts. Once you are done with this, you move to the next one. So I don't think this will be relevant to many of us. This will be the stock analysis for a manufacturing company. So, I mean, it's an issue of managing stocks. So things like raw materials and all that. Allow me to skip that. I go to the next one. So sheet E1 is talking about these are the capital allowances. So, and remember there are different capital allowances. So for people with massive investments or serious capital expenditures, capital investments, they enjoy what we call investment deduction. So these are deduction you incur in the first few years of operation. So KRA just wants to give you an allowance for, for doing, let's say, a 10 million or 5 million investment. Might it be a building, depending. There are a bit other nitty-gritties to this. So assuming you've done a hotel or a bit of a construction, so you enjoy what we call the investment deduction. So the details, you should list them here. But I don't think most of us fall in these categories, so allow me to skip that. But this is simply a capital allowances page. And again, it's a bit easy. So you simply just fill in. It's not very complicated. Now this one for wear and tear. Remember the classes, which the different classes of your computers, motor vehicle, blah blah blah. So whoever who is doing your tax computation should have such a schedule with a list of assets and of course whichever categories they fall in. So you simply copy paste the values here. So the different values of the wear and tear, and you just put in them here. And then in the next sheet E is where we'll have the summary of all that. Moving forward, sheet F is on installment taxes. So remember earlier we talked about installment taxes. So you are doing this after a whole year of trading, and that year you've been paying installment tax. So what you've been paying, because it's advanced tax, installment tax is a form of advanced tax. You fill it here. You capture. They are normally they are paid in 4 sets. So you fill them there. You can add a row if you need an extra row, but ensure you capture every other detail. Withholding tax credits, this area is great. So KRA, initially they had this section where you had to key in a case like for EVA, if your employer withhold some money from you, so you would be able to put the PIN, name, blah blah. But now they put this section uko mbele tutaiona mahali. So advanced tax, so guys who have a magari, something like a pickup, a truck, which they pay for advanced tax. So this is a page where you fill in such details. I don't think there's anything here. So moving forward, yeah, I may need to mention something here. Previous year's losses. So for companies, you are allowed to carry forward your losses for a maximum of 7 years. So if you've been making losses, so you simply just have to record those losses here. Then you can use those losses to offset your profits the time you start making profits. So if the past 7 years have been making losses, I just have to keep on recording them here. Year 1, year 2, blah, blah, blah. And then year 8, if I start making profit in year 8, I use that profit, I net off against what the losses I've made. So that, I'm not charged tax on that. So that's where this is very relevant. So the other page, if you're also on partnership, there's a page for you where you list the details of the partnership, name, the share of profits, and all that. Then here we have the tax computation. So if you fill the other details correctly, there will be very little for you to fill on this section. So it's more or less, I'd say a straightforward exercise under this category. Yeah, just want to rush a bit, not want to take a bit of time. Yeah, so I think once you're done with filling in every other section, you just come here and validate. I think one point to note is that this form is normally a bit complex. It's not like the individual tax form. So I always encourage someone, if honestly you are a bit stuck, just engage someone to assist you with the filling. Because if you went to the every other detail, it might take a bit of time. But someone who is a bit conversant with this would be willing to assist you on filing that. So at least you're always on the right side of the law. So you validate this. So this will give you a zipped file to save you on my desktop tab on the computer. And then so you go back to your portal, then that's where you pick that zipped file, then you file it. Remember, I think Moshigadi demonstrated that bit. It's more or less the same. So I think I want to stop the Excel sheet at that bit, then go back to the PowerPoint. So this is where we had stopped. So we've logged in onto the portal, we've put in our KRA PIN and password. So we go to the e-return. The reason I didn't put screenshots here for the portal, because it's a straightforward exercise on this bit on the portal. I did the complex bit is on that Excel sheet. So you select the obligation if it's for a company, so it should be income tax company. So you download that Excel, which you've been looking at. And remember to always enable macros. It's normally disabled macros on the form. So you enable it so that you're able to edit it. Then once you complete, you validate, as I said, and then this will generate a file on the zipped file, which goes to my folder, add my documents folder. Then you upload that zipped folder on the iTax portal. And then KRA automatically sends you an acknowledgement on your email, the registered email address. Yes, so something else. So in addition to filing, you need to generate what you call a PRN. So a PRN, it's a unique number. For every payment you make to KRA, it needs to be accompanied by this document, a payment registration number. So it's a document which outlines what you are paying, the obligation, the date, and the amount you are paying for. So you get VAT, withholding, income tax, installment, you have to have this document. It's actually a document, but this unique number. So as I said, all KRA payments must be accompanied by their PRN. So, and you also need to quote the number. So if you are also paying via EFT or via M-Pesa, you need to quote that number. It's the only number which defines or outlines what you are paying for KRA, as far as KRA is concerned. So how to go about this? You log in onto the portal. I'm not sure if I should go on and log in here. Yeah, so you basically log in, your PIN and password. Then there's a tab for payment registration. You fill in the payment information. So basically asking for the mode of payment. Are you paying via EFT or via check or via cash or via M-Pesa? Then you submit. Then it also gives you an acknowledgement on your email address. Yes, and I think that marks the end of my presentation. Thank you. Back to you, Ambrose.
Thanks, Richard. I can see there are some pretty good questions coming in. I think I'll start with there's a question from Eva. I'll give you questions in sets of 3 so that you can just answer 3 questions that I got. Eva was asking the way one can report life policies for a tax relief, can one do the same for health insurance? And then
come again, the way?
I think you can, maybe if you can expound on that.
Okay, when Alfie was talking, he said something about life policies. Like there's a place where if you have a life policy, you can claim it. So can you do the same for health insurance if you actually pay for your own health insurance?
No.
No.
If you pay, the reason it was relevant for income tax, for individual tax return, because it reduces your tax burden. So whatever what you pay to an insurance for a policy, it reduces. But for health, it's not. Yeah. For health insurance, it's not applicable.
Okay, I think if I can go ahead with your advanced tax question.
Okay, so my question on advanced tax is, I received an email from KRA saying that I owe advanced tax, and I don't know what that is. So you 2,400.
Walipe tu.
For what? I don't even know what it is for. But it says that I owe them.
Okay.
So I was wondering what that could be for.
Okay, thanks. Richard, just note that as I give you the other set. There's a question from Fred, where I have a registered sole proprietorship business with no KRA PIN, so that means the business is still sharing the KRA PIN with the owner. How do I file the returns? If I need, or do I even need to? That's a question from Fred on sole proprietorship. And then Are there timelines within which one can edit their filed returns? I think you can address those three.
Okay, so for Eva, for that advanced tax, I suspect probably someone, well, I'm not suspecting, because advanced tax is only applicable for when you're paying advanced tax for motor vehicles. So probably you might own a car truck somewhere or a pickup, I don't know. And someone to pay advanced tax. And remember, it's paid annually. And you need to put a PIN number when you're filing this.
Also, now I'm supposed to file it when I'm doing my income tax.
So if you already paid that, Nini, come on, assuming you are, this a commercial vehicle in the inspection, you need to have booked for advanced tax. So Kishalipa, so at the end of the financial year, whatever you paid, you need to declare it.
In my individual one.
Sorry?
In my individual tax returns.
Yes. Because kama ulitumia PIN yako, you need to declare it.
Okay, and what if it's co-owned? So do we both declare it, or one person can?
No, whoever who used whichever PIN which was used when filing the advance tax, when paying the advance tax, you declare. It's not normally a big deal. No. Yeah.
Okay.
So whoever which PIN was used, it's one supposed to declare that at the end of the financial period.
And you declare it in your individual tax returns.
Yes,
right?
yes. Remember that Excel sheet kulikuwa na bit ya advance tax.
Okay.
Yeah, so you just include that amount there. Actually, you just include the amount, no other details. If you paid for one vehicle, it's 2,400, so you include that amount there.
Oh, so if I have not paid, I need to pay.
Yes.
Okay.
Yeah. Okay. This issue also proprietorship filing. So if Richard also has a business name and he trades with the same my own unique PIN number, so I need to file I think I want to use Eva's case because I might be offering consultancy and I'm not a registered entity. So the same Richard who works for company XYZ, so earns mshahara, but also has a consultancy where I offer a consultancy that can be in a way sole proprietorship. So how you tackle that? When you are filing your income tax return, kuna bit ilikuwa inauliza, do you have other income? So that bit you tick yes. So if you tick yes, so that form adds other tabs on that Excel sheet. Inaongeza the profit and loss and the balance sheet. So what I need to do is now to populate that. If I got other income from consultancy or from any other income, now in addition to filing my individual tax return from my P9, I file that other consultancy or any other form of income I earn. So yes, but just to answer the question, you're supposed to file that with the same PIN number, but using your form in individual tax return. The last question was on the timelines for filing an amended return. So the timeline normally remains the same. KRA does not extend. So if for a company you have 6 months to file your income tax return, whether it's original or amended, you need to play within those timelines. Otherwise, ukichelewa, they hit penalty on you. So the timelines still remain the same. Thank you.
Okay, thank you. The next time you're looking for Richard, you'll pay the professional fees. So tafadhali uliza swali yako leo. Kuna mtu ako na swali? Yes, Fred, go ahead.
Mbili, one, amesema the times remain the same. I am not sure about the times. Ni what period, within what month and what month after filing returns, if there is such a timeline. Then two, jibu ya sole proprietorship being filed under individual tax by declaring other income. Now, if I go that route, and then this side we have turnover tax, am I not going to have issues in future with turnover tax? I'll never be treated as one of those people who should pay turnover tax in that case. assuming the business earns less than 5 million a year.
Asante. Anyone else? Mkulima Nicodemus.
Yes, Ambrose.
Kuna swali ama you'll pay Richard his professional fees?
For now, no. Nitaona Richard kando. If I start my problems now, tutamaliza but I will talk to Richard. I have his number, so I'll always reach out to him.
Okay. Mutaiti naona wewe ulipitwa. Richard, proceed.
Okay. So Fred, the timelines for filing your income tax return, the amended bit. Remember we said it's 6 months after year end. So if your year is January to December, you have until June of the subsequent year to have filed your income tax return. So assuming in between those 6 months you filed the original return, then you realize there was an error, you need to make the amendment within those 6 months. Don't file in July, then you tell the taxman that, you know, I did the original on time, but now I'm amending after. The amendment won't go through if you do the amendment after the 6 months. So the timelines remain the same, 6 months after the year end. Secondly, you're asking about the sole proprietorship, filing that and whether it conflicts with TOT. So remember, for turnover tax, you need to register. It doesn't apply automatically. So if you feel you are doing consultancy or any other form of business and it's below the 5 million threshold, you need to register. It's actually on the portal. It's one of the obligations. So you need to go and pick that obligation, you register. So that KRA does not have an element of double taxation. So ideally, it doesn't apply automatically. You need to specifically register for that. I'm not sure if Fred, I made that clear.
The case is the business is registered.
Yes.
As a business, pale e-citizen, but there is no independent KRA PIN.
Yes.
So is there somewhere I register to be eligible for paying turnover tax? The registration we're talking about is registering the business.
So so in this case, you're still using your individual PIN to do your dealings for this company or for this business, right?
Yes. Yes.
So in this case, you can register your individual PIN for turnover tax. But remember, if you're employed, you can't be paying pay as you earn and turnover tax. So in that case, what KRA will do will subject you to the 30%. So if you want to use your individual PIN, it can't apply if you are still an employee of a certain organization where they are deducting pay as you earn. But in cases where you have pay as you earn and you also have other incomes, so you use the same form as I was saying earlier. Just use the same form to file your taxes.
Sasa nimeelewa.
Okay, thank you. Samantha, you can go ahead and ask your question. Kuna mtu amesema utuwekee video.
My question is, if you own an app, an application that gives you income, is that income taxed? And if so, where does it fall under? Is it a business? Is it, yeah.
Thank you, IPP. Anyone else with another question to Richard before we close that session up? Steve Maina.
Mimi niko sawa.
Oh, sawa. Ruth Mweni, any question? Okay, I think Richard, you can answer.
I have a question.
Yes, Eva.
What is the worst that KRA can do if you don't pay taxes?
Thank you. I think Richard, you can address the two, and then finalize on the discussion.
Okay, so for Samantha, so if you have an app that is generating you money, well, okay, that's a unique one. So I want to assume, is it something like Uber or this online trading business? So I don't think KRA have a way of capturing that. And the reason is because as long as in your dealings, your PIN number or your company's PIN number is not involved, KRA is really limited in terms of getting to know whether this income is taxable or not. But for that, I probably may need to come back to you. I'm not really sure about that, or rather what sort of income this might be. Probably we can speak on the side. Eva, what the worst KRA can do? Block your KRA PIN number. Yeah, I mean, if you don't, of course, they'll hit you with penalty and fines. If you don't pay, they can suspend, or yeah, they call it suspension. They suspend your account where you are not able to, to trade or use your PIN in your bank account, in your purchase of property or wherever. I mean, which is quite, you don't want to go that route. Yeah,
And
so
let me ask,
yeah.
M-Pesa doesn't use our PIN, right?
Yes.
So one can trade and put money on M-Pesa if they block your, because some of these things are just too punitive and it's too much work, first of all, for a person who's not even making enough money to keep on going to KRA to do all these things. Like for example, mtu mwenye ako ushago, you're going there, you're earning your few money here and there as you, maybe you go do the small jobs in the farms around, you earn your money. You registered for PIN when you are in campus or whatever to get a bank account. Bado wanakufuata 10 years later na una job. You're doing those manual labors and what. So surely, how would they get you in such an instance? Because you've not been filing. Because hata hujui kwenye iTax iko. You get?
Well, you see,
it's just, to me, it doesn't make sense for them to be in our throats and we make very little money compared to the billionaires in this country.
Yeah, I mean, yeah, that's true. But I mean, at the end of the day, this is taxman and this is the law. And I mean, you are just one mwananchi out of the 47 or 7 million. So the best I think we can do is just compliance. And that issue mentioned, assuming you registered for your KRA PIN back when you are after Form 4, and now 10 years later, KRA is following you. I mean, if you've not been under any income, KRA will, even sometimes they also lift those penalties. Every person is supposed to be filing annual tax returns, whether they are under income or not. So assuming you've not been filing anything and how you haven't been under any income, you are basically, you go talk to them and they're able to offset, or rather, just cancel those penalties which probably they had hit you with. So, but I think the bottom line is just to be on the good side of the law. The same way when I kurusha my police station, don't do that with the taxman. They can be really nasty at times.
Anyway, yeah, that's true, because we're also planning on being rich in a few years. So
yeah, exactly.
Comply right now.
Yeah.
Okay,
yeah.
Thanks, Richard.
Asante sana, Eva. I think we can finish up with a question from Mutaiti.
Yes, I have a question.
And also, I think there's a question from Steve. So let's have Mutaiti, then Steve.
So we are a group. We registered ourselves as a society and opened a bank account. That was back in 2017, and we have been contributing and depositing our monies, but we have forgotten to file our returns for the last 2 years. How can we? Is there a way we can overcome? 1, 2, the person who registered the PIN forgot the email address and the PIN. How can we retrieve the PIN so that now we can file returns for the consecutive years? Yes. Thank you. Sijui kama nimeeleweka.
I think Richard amekuelewa. He'll respond to you. Steve, you can pose your $13K question.
Okay, I think I have in my P9 form for the, is it last year, money this year? Okay, the one I generated this year filing in June. There's somewhere they indicated that they had taxed me. I can't remember the word, whether it was surplus or excess, but it meant that they had taxed me 13K excess of what I'm supposed to be deducted, either by my employer or them. So what does that 13K means? Does it mean that I've been actually taxed 13K in excess? And can I have it back by any chance?
Inamaanisha tu uende ulipe. I think Alfred, you can respond to Steve, and then Richard will respond to Nicholas as he does his final remarks.
Okay, so Mutaiti, so for society, remember you are supposed to be doing your returns every year also. So if you started in 2017 and you haven't been filing any return, of course, I'm sure if you log into your portal, there will be penalties, a few 20,000 Apple. So the best I think you can do on that, you can apply for a waiver on the portal. When you apply, they normally call you. So you apply and you follow up with, you go to your station. If you know you are KRA station, you go there, you need to do a letter and just upload it on the portal, and then you follow it up. So nowadays I realize they normally allow some of those applications for waivers if you've not been, if your case is genuine. Yeah, so I don't think that should be a big deal as long as you've not been making money and not filing. Secondly, if you've lost your email address or you can't remember, or you lost the password to get the email, you can always go to KRA and they're able to check on the back through the back system, and they reset the password for you, and you give them an email address which you want them to be using. You want to be using from there moving on, and they're able to, input that email address on the system. So that also shouldn't be a hurdle for you. Yeah, that's how I'd respond to that. Yeah, so with that, I want to say thank you. Thank you very much for your time. It's been a pleasure speaking to you. Yeah, and in case of any issue or challenge, feel free to reach out. I'm sure Ambrose has my contacts. We can speak on the side. Asante sana.
Thank you, Richard. Alfred, you can take on Steve. He may share one of the dollars, a few of them.
I'm thinking it's a question about the 13K on the P9.
Yes, yes.
Okay, in that case, you have to reach out to KRA. I'm thinking it could be either an issue of just a discrepancy between the pay and the tax payable. You know, the part where I was mentioning that there's a difference between the relief tax and the personal relief. The insurance relief and the personal relief. There could be a bit of discrepancy there. So the best thing would be to reach out to KRA, see where the anomaly is, especially with regards to the P9. So the easiest way is just to contact them, and I think, as Robert said, you can go to the nearest branch, or maybe the section where you're in. If it's a southern part, like assuming maybe it's around Mombasa Road, there's an office at the Samia Park. So just look at the nearest place you can go and get that resolved, because if it keeps on going on, then the penalties also accrue. So the best way is just to reach out to them as soon as possible and check out the pin. For them to just check out the P9. Also, if it's the employee, maybe sometimes it can be the employer who maybe failed, who maybe had maybe an error in the filing of the pay. So now that would mean that the employer, especially the finance department, not take it up and look at how they can be able to reconcile that with KRA.
Thank you, Alfred. I suspect my employer is a rogue one, so Yeah, I'll try to follow it up. Thank you.
I also suspect your employer. Steve, I think you can do vote of thanks to Richard. And then, yeah.
So, Richard, thank you so much for making time to come and enlighten us about tax issues. I think we have all been trying to understand. Nimekuwa hapa na calculator, trying to see where these numbers balance. But at least I can speak on behalf of the rest of our members that we have a little more information and knowledge about tax issues from your talk this evening. So for that, we thank you and we look forward to engaging you further, both at this platform and also on a professional platform as a consultant. So asante sana, and thank you for your time.
Thank you very much.
Can I ask one more question to Richard, please?
Oh, I thought you were posing the question to Steve. He's now an expert. He can
No,
answer.
wachana na Steve. Richard, do you offer your services for companies? Like, would you file if somebody had a company and they wanted their taxes filed? Do you usually do that? Of course, for a consultancy fee, ndio tulipisha withholding.
Haizi kataa pesa.
Yes, I do.
Okay, sawa, tutapatana dingine.
Okay, asanteni sana. Yes, the concern on where Eva is wondering how Steve's employer is rogue. Sisi wote tunashangaa hivyo, but we'll not get into the details of Steve's employer. Tuko online. So, and with that, I think tunaweza salimiana. You can say you are happy dollar, or you can say you are happy, or you can say hi to someone here. And we will call it a day at 8:45. So kama kuna kitu ya kusema, it's your time. Just unmute yourself and proceed.